The fifth largest airline in the United States, Alaska Airlines, is holding a key investor day in New York City later on today. Ahead of its presentations, we're getting a few numbers. Alaska said it plans to grow an average of 4% to 8% per year through 2025. The company adds it will accelerate its transition to Boeing airplanes for its fleet from Airbus. Joining us now is Alaska Airlines CFO Shane Tackett. Shane, good to see you here. Welcome back to New York City. I spent a little time going through your latest annual report, and you do note in it, by summer 2022, you expect to return to pre-COVID flying levels. I mean, do you still see that happening, and what are the drivers?
Yeah, no, thanks for having me, Brian. And we do. We're excited to get our company back to the size it was before the pandemic hit. We actually already are back in our core market of Seattle and much of the state of Alaska. So now we're building out the rest of our network in California, and we expect to be at our pre-COVID size in May or June of this year. We're really excited to be able to finally get back to that level.
Lots of focus today, Shane, on the mask mandate on airplanes potentially being lifted. Do you support that? And would a maneuver like that unleash more demand for an airline like yours?
Yeah, Brian, we do support it. We were happy to join the industry in asking the White House to reconsider the mask mandate. It's not about necessarily not having masks on. If people want to choose to wear a mask, our employees or guests, they're more than welcome to. But with the mandates having rolled off in much of society, it's a hard thing for people to walk into the airport environment and then have to don them again. It puts our employees in a tough position to have to police those mandates. And we know the science is that the air in our aircraft is very safe. It's a safe environment to be in. And so we were happy to join the industry to ask for a rescission of that mandate. In terms of demand, it's been very strong right now. And I think if the mandate goes away, there are probably some people who will also want to go out and travel, but we're going to have full flights through spring and through much of the summer based on the demand we're seeing today.
I'm curious what you're hearing from, Shane, it's Julie here, what you're hearing from pilots and also flight attendants. The Flight Attendants Union at one point had wanted an extension of the mask mandate, although I believe the Southwest, in particular, Flight Attendants Union came out in support of removing the mandate. I'm just curious what you guys are hearing from employees.
Yeah, no, it's a great question. Thanks, Julie. And I'll let AFA and ALPA, our pilot and flight attendant union, sort of speak, to their position. I think what we hear from our employees, though, is they want to go back to caring for guests. They want to deliver service on board. They don't want to be in the position to have to police the mask mandate. And so I think increasingly we hear a lot of our employees say, hey, we'd like this mask mandate to roll away. We'll still have employees that wear masks, that they feel more comfortable and safe with them. And we'll have guests that do the same, and that's going to be fine. They just don't want to have to enforce the mandate any longer.
Shane, give it to us straight. How much are ticket prices going to go up this summer because of higher fuel prices?
Yeah, so the ticket prices are strong right now, and they're probably not really related to oil. It's just because demand is so strong. We're going to have, full planes. I think our fares are as good or as high as they have been for us throughout the entire pandemic. They're still not. They're reasonable. We're talking about prices that are maybe 4 or 5% higher than they were in 2019. Which was 3 years ago. There's a lot of inflation going on obviously in the economy. And so we're very cognizant that we don't want to stretch our consumers, our guests too far, but we're seeing a very strong demand environment. People want to get out and travel right now.
Well, it's good. Thank you for providing that clarity. Finally, someone is actually sharing how much they're raising prices. That's a good thing to see. On the energy front, how much of your fuel cost is hedged, and how much has your cost base gone up this year?
Yeah, so fuel obviously has spiked from the 70s up to 110, 112 today. We're fortunate. We have, for the last 20 years, hedged half of our fuel consumption, expected fuel consumption. And so we're in a position where we can weather this current increase in the price of oil, perhaps better than some in the industry who aren't hedged. We're glad that we have those hedges on the books. The increase in the price of fuel is probably $150 to $200 million for us this year. And so it's not inconsequential. It's a big number. And we're hopeful that prices come down, mostly for consumers. We don't want this to impact the economy and people's ability to get out there and take trips and go on vacation. And so we're really hopeful that we can see some stability and relaxing of the oil prices as we get forward in the year.
I want to ask about a program, sort of a pilot program, pardon the pun, that you guys have rolled out. And it's a subscription model where people can sort of buy a book of flights, for example, or buy a sequence, just like on New Jersey Transit, I can buy a number of fares, for example. How is that program working out for you guys, and do you expect to expand it?
Yeah, Julie, a couple things. One, this was an idea that came from in the company, in our commercial team, some innovative folks in our commercial team that wanted to go and try a subscription model. It's really focused on California, Arizona, Las Vegas, Nevada. And we all are buying more of what we consume through subscriptions. And so we thought, hey, this is a great idea. It's a really good innovation. Let's start small, see where it goes. We've had really a high uptake relative to what we thought we might see. It's not a ton of passengers because we didn't expect it to be a big number, but it's more than we had expected. In California, certainly folks who want to fly back and forth between Southern California and Northern California. And so we're excited. We're going to watch this for the next few months, see if we want to expand it or not. But it's a great value. You can travel multiple times a month for a fixed fare. And we're seeing people really like the product so far.
Well, one thing you are expanding, Shane, is your commitment to using Boeing airplanes instead of Airbus. So you have 93 orders of new 737-9 aircraft through 2024. That's a big commitment. Have you talked to Boeing in light of what has happened in China with the China airplane? And have you lost any confidence in what Boeing is doing?
Yeah, so first, our hearts go out to those who were impacted by the accident in China. We're in constant contact with Boeing. We don't know what the cause was. We're not speculating about that. We'll learn once authorities have a chance to fully investigate that. In terms of confidence, we are fully confident in Boeing and the product that they produce. We have a large fleet of Boeing aircraft today. We're aggressively taking new MAX aircraft. They're incredibly safe. They are a great company. They're committed to the safety of their planes. And we know that they will do everything in their power to find out what happened. And if there's something with the airplane that needs to be looked at, they'll look at it. But right now, we have nothing but confidence in the products that those folks build for us.
Shane, as we see an increase in demand that is already happening, right, as people want to get back out there, I wonder how quickly the sort of capacity debate will come back into the airline industry as you guys look to sort of streamline the fleet, as you were talking about with these Boeing and also the Embraer planes for regional flights. And you talked about increasing capacity, I believe 3 to 5%, if I'm not mistaken. Is that a longer term plan as well, even as we see increasing demand?
Yeah, no, we're excited. So our order book allows us to grow up to 40% over the next 4 years. Our target growth is 4 to 8%. We're not going to be at that in 2022 because of the first quarter and Omicron and some things that we needed to do to manage capacity down. But we're really excited to get to our pre-COVID level size, as I said, in the summer, and then really start to grow above our 2019 size thereafter. I think we've got a lot of opportunity on the West Coast. We feel like we've got a really loyal base of customers. I think we've got strong preference in our core geographies. And we're excited. We're a domestic leisure-focused airline, and that's sort of what people are doing right now is getting out, going on vacation in the United States. And so we want to grow with that consumer demand.
Well, good luck in your presentations. Looking forward to talking to you again. Shane Tackett, Alaska Airlines CFO. We'll talk to you soon.
All right. Thank you so much.
Appreciate it. Coming up, Amazon is being dropped as a sponsor from the